Hi, everybody. Thanks for coming tonight. We really appreciate you attending our first rekindling of our board education events. My name is Dan Howman. I'm the president of Advocate Property Management, if you haven't met me before. Tonight we're going to be talking about budgeting, and we have with us Karen Skoric, who's the owner of Cantey Associates. Cantey provides accounting services as well as they do audits and tax returns for a lot of our associations. So we work a lot with Karen. Probably many of you have Karen's firm as your accounting firm for those purposes. At this point, I am going to turn it over to Karen, and she can start the presentation.
Great. Thank you so much, Dan, and thank you to Advocate for having me. Honored to be your first as we get back to somewhat normal board education. So very excited for that. Tonight's topic, as Dan mentioned, is budgets. It's timely. It's what we're all in the midst of right now. So couldn't be a better time to kind of discuss that tonight. So really, we're going to talk about why the discussion on budgeting right now. And your association, even though it is a not-for-profit, it's still a business. I mean, some associations have $1 million, budgets, and you're running $1 million business. So you need to run it as a business. And the board also has a fiduciary role. You have to run and operate that budget. And also you're a fiduciary to other people's money. And I think that's one important thing to keep in mind. You're collecting all these assessments and people's money and just making sure that you're running this thing, as a fiduciary to their monies and to the business, and also making sure there's due diligence, that you have the funds to operate the budget and the association efficiently, and you want to spend that money in accordance with the budget that you're putting together then. Some associations have cash flow might also be a problem. So a budget, you're putting together a plan of maybe what expenses and projects are going to be done and how you're going to pay for them. Also, to understand the importance of why a budget's created. Really, the main purpose in my mind is it's to help determine what the assessments that the unit owners are going to be charged for the next year. And then it's also one of the most important responsibilities of the board, because you are determining that assessment. And it's also a legal purpose then to help collect those assessments. Without that budget and determining that assessments, then, if there's a unit owner that's not paying, then it's hard, for the attorney to go after and say, per the budget, you were determined, to collect these assessments. And then also we'll talk about reasonable reserves. That's a hot topic right now too, determining what is reasonable. And that kind of it depends on each association. From time to time, I think Dan would probably agree, we always get that question and say, well, what should we be putting away for reserves? And I always say that's $1 million question. And if Dan and I knew the answer, we would be millionaires right now. But I think that all depends on every association, depending on the age, the number of components the association has. I think more and more, and I could speak as I've been getting emails through CAI, there's more importance on that right now with the whole building collapse down in Florida, that we're seeing more and more get pushed out to us about importance of reserves and reserve studies, and looking at these components and being able to evaluate what work needs to get done and how you're going to pay for that. So we'll touch on that a little further later as well. And then the main thing too, I think, as associations either get reserve studies for the first time, or they're maybe having the reserve study updated. I think one of the shocks that boards see is that their reserves are usually pretty underfunded when they get that study or even an update. There might be budgeting a certain dollar amount, and then when they get that study, it's 3 to 4 times that. And how does the board work with that and factor that in and take that into a consideration, knowing that we can't always take everyone's assessments and triple and quadruple them? and trying to figure out a plan for that. And then also we're going to talk about communicating the budgets clearly to the unit owners as well. And that's an important piece of it too, because I think the more you communicate in that transparency, then the better result in the end with the unit owners. You know, you're being transparent as far as what projects are coming, any budget increases, any loans that might be coming due, any special assessments, and just notifying them that there's things coming down the road that they may have to factor into, you know, their own personal budget if there's a special assessment, and, you know, they're going to have to pay that over a number of years. And then done properly, you know, the budget's also, it's an excellent management tool. It lets you know how you're doing. It lets you make decisions as you're going throughout the year. I feel like this past year, associations come February, their snow budget was already kind of exhausted for the year. So then it's determining what are we going to do for the rest of the year then. You know, maybe we're not going to lay the mulch this year, or maybe we're going to defer a project because, you know, our snow budget went over significantly. And then also making decisions on other items if they're operating higher than budget. I think this year we're seeing a lot of increases in material costs and services. I've seen a lot of cleaning costs go up with COVID, and just being able to take that data that you're seeing on a monthly basis and make good decisions with that. So let's talk a little bit about some of the legal responsibilities with the budget. The first thing you want to do is kind of look at your governing documents. Your declaration and bylaws may have a clause in there that discusses any overages or underages. So if some of the declarations or bylaws would have a clause that says at the end of the year, if you have an overage, you're supposed to factor that into the next year's budget. Same thing with an underage. If you came in under, then you're supposed to factor that in. And that's a hard thing to do, especially, you know, it's August now, you're working on your budget. And how do you factor that in, knowing that you still have 4 months of the year to go? There's a lot of, you know, uncertainties, maybe as far as costs coming up. And I think the biggest one plays into that is, you know, I think a few years back we had snow in October, snow in November, and I think some of the snow contracts weren't, you know, covering that period, and there was some overages that ran then. So that's one thing to consider as well. And then the other legal responsibility then would be communicating that budget to the homeowners and how you do that. And the one thing we do always suggest on that is kind of leave it as less is more kind of a thing. Or did I say that backwards? More or less. Where you don't want to paint a perfect rosy picture if that's not really the case. Some boards like to use that letter we've seen where they're, you know, going through all their accomplishments and everything they've done, and we haven't raised assessments in 5 years, but then they know that a storm's coming due and they're going to have to replace those roofs in a few years, and they're going to have to increase assessments or special assess or get a loan. So it's communicating the budget and the reality to the unit owners so that there's not this false pretense out there that everything's fine if indeed there is a storm coming down the road. So one of the things we always like to start with when we're doing our budget is the reserve study. Sometimes I feel like the reserves always get the end piece of the budget where we always know, okay, we're going to plug in all of our contracts and we're going to lay that all out. And okay, we know we can't do assessments more than 3% because then we'll have everyone coming to the meeting and yelling and complaining. And then what happens is what takes the hit at the very bottom is the reserves. So I always like to start with the reserves and at least pull that study out and let's plug that number in. It's always a starting point. The reserve study is really just a guide. It's a tool. It's not a Bible. It's a tool that helps determine, you know, what's coming and what you should be contributing to the reserves each year. Not only do you want to look at what that reserve contribution is, but you also want to look kind of at the 5-year forecast of what's coming up over the next 5 years. You know, if you just kind of look at, okay, my funding number per the study is 100,000, I'm going to plug that in. But what if then you have all these projects coming up and the roofs need to be replaced, or you need to have, you know, some asphalt work done or concrete, and you're not looking far enough ahead to see if you have enough under reserves for that. So the other thing you want to do is not only look at that contribution that the study is recommending, but also what else is coming up in the future. And then we always get the question is, what if there's no study? I don't know, Dan, I always recommend that they have a study. But I know there are some associations that might have very few common elements, maybe just a monument or some front entryway that they might not have a lot of reserve components. And I would say at a minimum then kind of figure out what those main components are and get some kind of estimate on pricing on that and kind of an idea of when these are going to need to be replaced and kind of factor cost and if, you know, things are going to need to be replaced in 5 years, what's that going to cost and how are we going to pay for that?
Hey, Karen,
Yep.
I always like to ask the question, what's the minimum you should put in reserves?
We've always heard 10%, but if you ask me, I always say it depends.
So I always say 10% because there's a lot of financing
Right.
For home sales.
Right.
That where they look at the budget and require
A minimum,
10%
right.
for certain types of financing.
Right.
So it's important to keep your homeowners in mind and make sure that by putting at least 10% in, you're enabling buyers to buy their units, which should help increase prices in the neighborhood.
Right, absolutely. At a minimum rate. All right, so what to do if you actually have a study and you're not budgeting per the study then? I mean, you have to figure out that long-term plan. How, if you know, if your roofs are due in the next 5 years and you're supposed to be putting 100,000 away and you're only able to put 50,000 away, how are you going to pay for that? And it could be that, you know what, we can't put that away, but we know we're going to need a loan. We know we might need a special assessment. We need to plan ahead for these things. Or maybe it's a combination of both. I mean, I think right now with interest rates, we're starting to see a lot more loans out there. I look at loans as a good thing and a bad thing. It's a good thing because it gives you that upfront financing, but you also have to think part 2 of that of how are you going to pay for the loan? And what we see sometimes too with associations is they'll budget $100,000 reserve contribution, but then what they're doing is they're kind of turning around and paying that loan payment right back out of that reserve then. So the budget, do you have a question, Karen? Or, oh.
You can finish.
Okay. Okay. The budget then looks a little bit misleading because it looks like, hey, we're putting in 100,000, but when you're actually putting in 100,000, but then you're turning right around and paying 100,000 right back to the bank to finance that loan then. So what you don't want to show then is misleading that, hey, we're building up reserves when really you're not building it up. You're just literally contributing it to turn around and kind of compound the problem that you're in right now. If you're not putting that money away for the future then you'll be right back where you are right now, where you're going to need either another loan or a special assessment.
So the question is 10% of what for the reserves? 10% of annual operating?
Of the assessment stream?
Yes, that's what the question is. Okay.
Yep. With your other
10% of the
assessment stream.
Yeah.
Yep. Okay. And then we always get the question, when should the study be updated? Dan, I don't know your recommendation. We usually see like 3 to 5 years.
That's what we would say.
Okay. And sometimes too, if you're doing a lot of projects, it's sometimes good to have that study updated because then it could reforecast things and get you back on track. We've also seen associations, if they do have some large insurance claims where, you know, maybe there was a microburst or hail and roofs are being replaced and siding replaced, that they might want to consider after that's done having the reserve study updated too, because that helps to forecast out what they might need in the future and get them back on track as well.
Yeah, it actually might lower your reserve contribution requirement if that happens. So-
Right.
So there could be some positive.
Exactly. And then also maintaining those reserves then. I mean, that we get that question as well. And unfortunately, right now, interest rates are not good. You're getting very minimal on CD rates, but I also encourage you not to decide today that that's the time to go out and invest in something you should not be. Make sure they're FDIC insured, government-backed securities. I mean, if you're doing CDs, we always recommend too that you ladder them depending on projects that you have coming up.
Can you explain laddering?
Laddering would mean you don't obviously want to invest in them all coming due at the same time. So maybe you have them due, every year you have a couple due, and you also have to look at that study too, or what reserve projects you have coming up. You don't want to tie up these CDs if you know you have a roof project coming up next year and then you're in a 2-3 year CD, because you could possibly get penalties then to go ahead and, withdraw those funds from those CDs early. And then you're paying more than you're actually earning in interest sometimes on that too. We do, unfortunately, right now have seen some clients take a little aggressive approaches on reserves, and definitely not a recommendation. Don't want to be out there in the stock market right now. And once again, when we started this whole conversation, it was more about the fiduciary responsibility. And once again, it's the unit owner's combined money. You want to invest it fiduciary responsibility, not how you might invest your money, out in the stock market. That's definitely not recommended. Have a good conversation with the banker as far as there's many, tools out there that could help you with the FDIC limits right now. And the FDIC limit is $250,000 per financial institution. So if you have $500,000, and let's say you have some of it in a checking account at the same bank, and let's say you put your reserve money there too. So you have, let's say, $50,000 in operating, $250,000 in a reserve account, and a few CDs all at that same bank, you're over that $250,000 limit. So if the bank were to default and go under, the most you're going to get out of that then is that $250,000. So you always want to make sure that you're within the $250,000 limits per financial institution.
Are you going to talk about those other account types?
Yes, and yeah, if you talk to your bank, there are many other tools out there. There's a number of banks that offer what's called CDARs, or I don't remember all the technical names of them, but they work with these sister banks that then they allow you to keep your money within that one bank, but they diversify it within these sister banks so that it's a lot less management on the board side of trying to make sure that every account's within the 250. It's kind of a rolling account, what some of them do. So you could put $1 million in there and then they just diversify it within these banks to get to the FDIC limits on some of them.
So just to interject, Alliance is our primary bank. They have both a money market product and a CD product that allows you to spread it across multiple banks. They take care of all of it for you, so you don't have to worry about it. And it comes out on your statements. There's really not a need to go to multiple banks. You just need to make sure that you're using these other products when you're getting over $250,000 in one institution.
Right, and that's a good tool too, because otherwise it could be, if you have a lot of money in a lot of different banks, that's a lot of management to keep all those funds, especially once boards change over, making sure you're getting the signature cards updated and making sure that, you know, sometimes those CDs might renew and you miss that renewal date and now it renewed and you're locked in at, you know, 0.01% and you're, you know, not making anything on those funds then. So those kind of, those banking tools right now are really a great tool out there because then it's less management and, you know, the risk of, you know, something rolling over or the risk of signature cards not getting updated. And there's always liability with that. You know, if you have old boards on signature cards, you know, there's the possibility of, you know, maybe theft out there that old board member could cash out a CD without, you know, the rest of the board knowing. Also, we've seen some associations that, you know, the money from the bank has gotten sent to the state of Illinois as unclaimed property because they're sending it to an old address from a former board member, and then there's no response after a while, and then the money goes to the state. So then there's all the paperwork to get filled out to try to get that money back then. And then also the importance of segregating operating reserves. I don't think we see that as much anymore, any commingling, but what you really want to do is each month, you know, make that reserve transfer. And if for some reason you can't make that just because you're tight on cash, maybe because there was a big blizzard and you're paying, you know, a high snow removal bill for that month, make sure at least on your financial statement then you're reflecting that as a due to reserves then. So that's memorialized on that financial statement, and every month, you know, as you're looking at that, you could figure out a plan. Okay, we got 10 months left of the year. Each month we're going to work on paying that one transfer down that we weren't able to make. And then also try to pay the reserve expenses if you're able to out of the reserve account. If not, make those timely transfers from the reserves to the operating if need be then. And then also, if, you know, that allows you too of making sure that segregation is there, that you're not going ahead and spending operating money on things that it should not be spent on. I mean, I think sometimes boards see this influx of cash in their cash account and they're like, oh, we could do all these other projects that weren't budgeted for. So it's always important then, you really want to keep those cash accounts segregated so that you know at any point how much you have in your reserve account. The other question we get sometimes too, and I'm not a fan of, and Dan could give me your opinion on it. Some boards like to segregate out their reserve accounts and into a concrete, a roof, siding reserve. We like to just see one general reserve because what we see sometimes otherwise, let's say now it's time to do the roofs and you only have X number of dollars in your roof reserve. Then you get into the legality side of it. Well, can we take from the concrete reserve in order to help fund the roof reserve? So we prefer to see one general reserve fund and not delineated, you know, in the financial as the different components on it then.
Karen, I would say that probably only in the absolute largest of associations.
Right.
It's necessary.
Right.
Necessary, but for general, keeping the general pool is fine.
Yep, agreed. And then also an investment policy is a good tool to have as well. An investment policy sets precedent for future boards. Make sure, you know, the association only invests in FDIC insured investments. They're government backed. That way, you know, that's the association's policy. So as boards turn over and, you know, you don't have a new board member saying, you know what, let's go out there, you know, Pfizer is making all this money in the stock market right now. That's where we want to put the money because we're going to make the money. No, the board's policy is we only invest in these instruments then. The one thing I was going to say that I have been seeing out there, I mentioned earlier, CAI has been pushing a bunch of stuff through, and they came out with a one-page little flyer that came today called Condo Safety, and it's a resource for homeowners and board members. And it gave just a list of some questions homeowners should ask, steps homeowners should take, and then steps board of directors should take. And I think we might be seeing more of this, like I said, as a result of, the tragedy in the Surfside, Florida, depending on the type of building you have. I was just in one in the western suburbs for a meeting the other day, and it was a 13-unit story building, and I was walking through the garage of it thinking, oh, how safe is this under the garage? And I think that might be more of a hot topic coming up in the future. And some of the questions it says like steps board should take, and I think some of these were good. Seeking advice from professionals regarding building maintenance and inspections. Determine if there's signs of structural concerns that may need to be inspected by a professional engineer. And I think some of these are good to know when to get the professionals involved too. Review your reserve funding plan and fund accordingly. Have conversations with your community homeowners about reserve study, maintenance plans, and funding. Take actions required in the maintenance and reserve plan, maintain frequent communication with residents, homeowners about these important issues, and then be transparent with homeowners about how much repairs might cost and whether a special assessment may be necessary.
Hey, Karen, you mentioned CAI. Can you just take a minute and explain what CAI is for those who might not know?
Sure. CAI is Community Association Institute. It is a national organization, and locally we have the Illinois chapter. I personally was on the board of CAI for 6 years, president back in 2007. Been a member since '93 of it. It's a great resource for education, for the social aspect. They have a number of different educational programs they put on throughout the year. They have something what's called the DECAL, Dedicated Community Association Leader. It's a whole series of educational events too, where at the end of it, it's I think a 7-course plan. And once you finish that, you get what's called a DECAL certificate. So great resource as well, to get more education. I'm always a fan of education and getting that to bring back to the board and also the unit owners. And they have a great conference once a year too. This year was virtual, but I think the hope for next year is to get back in person on that too. And I know Advocate's a great supporter of CAI and participates in a lot of the speaking events, and Karen's on the board of directors for that too. So definitely.
Karen, our vice president of operations, is on the board of directors for CAI.
Yep. So awesome resource out there to get other education, and just even they have a lot of events that you can network with other associations as well. So we're going to talk a little bit more into getting into the nitty-gritty pieces of the budget. And that's the operation side of it. So as you're starting the budget process, the one thing that I know your managers are hard working on is getting all those contracts lined up for next year. And that's the one thing we recommend is if you could get those bids now, then you're factoring in the budget, what those actual costs are anticipated to be. We're getting a lot of calls right now. Hey, we're coming up on audit renewal. Can you send us an audit proposal for next year or a tax return? So that way, when they're putting the budget together, they're getting the true costs in there.
Karen, I did want to interject though that we can't rebid all the contracts right now.
Yes, I'm with you.
But a good practice
Right.
of having, doing them across the year so that.
Well, and we always think of budgeting to us is not, and maybe I need to clarify, is not a one-time a year thing. We look at it as an ongoing exercise. You're not necessarily bidding them all out right now, but as the years goes on, you're putting them in a folder. So when the budget's ready to, be prepared, you're pulling these bids out then. The one couple things I think this year with the rise in cost, we're seeing, definitely material costs go up. We've been seeing some insurance costs go up. I just saw an association the other day that we were working on an audit for that had a significant increase just because they had grills on the balconies, and there had to have been an addendum to that to add some additional insurance, and then they had to do a whole rule for that. Uncollectible accounts, I could now say, since we're a year and a half into the pandemic, I feel good that it has not hit us like we thought it might have at the start of the pandemic. I guess there was just the uncertainty out there that we did not know, what would happen with unit owners possibly being out of work or, that kind of thing. But I feel like at least the assessment stream has not taken a significant impact by that. But it is always good as you're working on the budget to kind of take a look at, if you do have any unit owners that are not paying, factoring that into the budget as well for some uncollectible accounts. Because if those unit owners, aren't paying, then that's money that's not coming in the door to pay those bills that you're budgeting for them. The other thing too is income taxes. I could say for 2021, interest rates, I feel like have definitely taken the hit, and probably I would say interest income is about half of what it was in 2020. So we're not seeing a lot of associations with significant interest. But some of them still have some healthy reserve balances out there. So there is some income tax that might need to be paid and something to consider into the budget. Some other items to consider, possibly if you're getting some kind of IDOT knocking on the door looking to widen maybe the streets or some kind of easements. Sometimes cable companies come in and want to do an exclusive marketing agreement. Those kind of things are taxable to the association. So keep that in mind when you're factoring your budget. Your federal tax rate, most associations will file what's called a Form 1120H. And that for the federal is at 30%, and for the state, it's at 9.5%. So really almost 40% of any of that would be due in taxes then. Also keep in mind if any cities have any municipal ordinances. We're seeing some with elevators or life safeties, depending on the city that you're in, even some of the suburban ones. We've seen Arlington Heights up there have some ordinances where they're having to do some life safety and some elevator work that the city is mandating, and just keeping that kind of in check too. I mean, our office building is actually in a condominium association, and I am somehow the president of that. I don't know how that happened, but we're just going through right now our elevator, and their property managers trying to tell us that now, the pieces to our elevator were built in 97. They're no longer supplying, so we're having to go through the whole elevator modernization as well. So the cost with that and keeping that kind of thing in mind. And lastly, did you have questions
I
or?
have a question.
Okay.
Right before you move on to the next thing.
Sure.
The question is, how do you handle black swan events like a time and material snow contract for a blizzard? Do you budget for the maximum amount possible, a lower amount, or are you allowed to move that to reserves so you don't blow your budget if you get a large snowstorm?
So you're saying if you budget for it and then don't spend it, move it to reserves?
I actually, to kind of tack onto this, I actually love talking about this. And in fact, the CAI class that I took and on finance, we talked about this, about kind of a snow reserve. If you don't spend all your money, how do you feel about moving, instead of giving that money back to the budget, move it to a snow reserve, and in years where you use more, you can pull out of that snow.
Got it. Interesting. That's a good concept as well, yeah. I mean, otherwise, I think if you budget for it and don't spend it and want to transfer that to the reserves, I think that all depends too on what your governing documents say. Some are specific at the end of the year if you do have an excess, what you're supposed to do with that excess. There's always creative ways that attorneys could help you with that, but some of the governing documents are specific as far as, you know, having to credit that back or give that back to unit owners, which, as we see, never happens because associations generally are never fully funded in their reserve. So there's ways to then be able to transfer that to the reserves, but stuff like that, you definitely want to get the attorneys and your managers input on that to help protect the association and pass resolutions on how to do that correctly then. And then also one thing to keep in mind, if you're just depending on the number of units in your association and you're doing a tax return only, it's possible you may need more than that. Back in 2017, there was a law change to the act that if you have over 100 units, that you have to do what's called GAAP accounting, and that's generally accepted accounting principles. And what that means is that's more than just, you know, having your management prepared financial. Sometimes associations think, you know, it's an accrual basis. It's more than that too. GAAP accounting is a full financial statement with footnote disclosures and a statement of cash flows. And the lowest level, and we could get into the different levels of services along with that, would be what's called a compilation. A compilation will give you full GAAP accounting then, and that would help fulfill that requirement. And we've had discussions back in 2017 with, you know, various attorneys as we're trying to work through what does this all mean and what frequency is this all. And it seems like it's the year-end accounting that it would fall under. So, you know, management does your monthly financial statement, and then at the year end, you would have what's called at a minimum a compilation to make sure that's under that requirement. And that's for if you're 100 units or more in a condominium. SECA gets a little bit more confusing because it's dependent on if you've adopted SECA or not, and there's certain income thresholds with the 100,000 of assessments. But for the most part, if you start with 100 units, that's a good starting point with it.
In a condo.
In a condo, yes, correct. So going back, we could talk about the different levels of services. So as I mentioned, there's a compilation, that's the lowest level. Then you go to a review, which is the level right above that, and then an audit, and then there's just the tax return. So just to mention, every association must file a tax return. We always hear that we're a not-for-profit, we don't have to file taxes. That is not the case. The IRS wants every association to file a tax return. If you file it's a weird industry that we're in because it's one of the only industries that gives the association the option of what kind of form to file. There's what's called an 1120H form, which is specifically for associations, and then there's what's called an 1120 form. And that's the same forms all the big corporations file. And we probably do about 1,200 tax returns, and I would say 99% of those, if not more, file the 1120H. The ones that don't are ones that can't qualify, maybe because they rent out the roof, you know, the building to cell phone companies and generate a significant amount of money from outside the membership. So they're getting taxed on that, and that puts them in a position where they can't file that then. But you at least at a minimum have to file a tax return every year. I will say it's due April 15th, but the IRS messed with us the last 2 years. And this past year, it was due May, and the year before it was due July. But I'm hoping next year we get back to April 15th. If an extension's filed, that's coming up in a couple months. It's due October 15th. So we're busy working on that deadline right now. So that's the tax return. An audit's your highest level of a service that we could provide. An audit, what we're doing is we're actually looking at invoices, we're confirming bank accounts, we're sending letters to the insurance companies, we're sending letters to the attorneys. We're in there asking a lot of questions, digging through records. We don't look at everything, but we do a test sampling of certain things. So we're really getting in there, digging around and getting, under the sheets. A review is the level under that then. A review is more what's called analytical. And in analytical review, we're asking more questions, not necessarily really looking at invoices. Might be more of, hey, Dan, like we noticed the snow removal budget's like 50 grand over budget. What happened? Well, don't you remember that they had that big blizzard and they weren't under contract at the time? So it's more inquiring about why things are happening versus an audit is more looking at, things. A compilation, which is the lowest level, is pretty much taking your year-end financial statement and converting that to that GAAP financial statement that we mentioned. Making sure we'll look at, is there any additional accruals that need to be picked up? Maybe you had, your snow bill was a big snowfall on December 31st, but that bill didn't come in until maybe later in January and it missed the cutoff, per management's financial. So we'll go ahead and pick up those kind of a thing. But other than that, it's really just getting it into a GAAP format. It's not getting in there and really looking at anything. And I think the last thing to kind of wrap up on this before we look at any additional questions and open it up to that is that understanding the solid communication. And then I think that definitely goes back to just making sure that you're being transparent to the unit owners as far as where the money's being spent, looking at that budget. What we see sometimes as we're looking through the year, now remind you, we come in at the end of the year, after the end of the year, and we're historians, we like to call it. So we're always looking back at the year prior. And, we look through as we're doing audits through the minutes and we're reading we want to get a feel for what happened during the year. And we see sometimes, that, there's all these contracts that are happening and costs are going up, and all of a sudden, we get to the October timeframe when they're approving the budget and there's no increase in the budget. And I think, Dan, you had a great point the other day that at least at a minimum, you want to be able to do what's the inflation rate, CPI,
Real price index.
which is at 5%
Yes,
this year.
for the
So,
last 12 months.
yeah, right. So keep that in mind too. I think definitely unit owners, as they would probably prefer a no increase. However, they don't like a no increase and then a sharp increase. I think definitely the way and the fiduciary responsibility is to keep going with that, at least that CPI, that consumer price increase each year at a minimum as costs are increasing. And it's also, letting those unit owners know that, the budget and we're taking into the needs and the costs of the association, and also keeping them in the communication as there are projects coming down the pipe and if there's going to need to be funding for that and how that's going to happen, especially, as there might be more people out there that are asking questions about reserves and what are you doing with the structural, components of the building. And the other thing too, sometimes we see our big costs are balconies, and whose responsibility are the balconies? Are they the unit owners or the associations? And making sure that's, getting taken into account as well too. And then we talked previously about that letter that accompanies the budget is just making sure that, you're communicating this back to the unit owners and don't have what we call the flowery letters, painting that perfect picture through the rosy glasses if it's really not that. And just making sure that that communication and transparency is there. I think that's all I have now. Karen, are there more questions?
there a recommendation on the frequency of having an audit versus a review versus a compilation?
I think that all depends. I mean, I always am an advocate of an audit, but I'm probably biased on that. And I think that also depends, I always say, on the board's controls and insights as well. If the board's heavily involved in reviewing those financial statements and looking at the expenditures, maybe, you could do an audit and then a review, the alternate year. I would definitely recommend that at least something is done every year, though, to keep that consistency, and it also helps to keep the cost down when it is time to do one then also.
So for those 100-unit condos.
Yes,
Compilation every year.
yes, they at least
That's a
have to
new-
do
new
that.
thing.
Yep.
So.
Yep.
Okay, the other question is, is your mic on? The other question is, can a board-approved item such as tree replacements be deferred to next year if it is later determined that there are insufficient funds? I think they mean after it's on the budget.
So they budgeted for it and there's not enough money this year for it?
I think that's what that means.
I mean, I guess in my mind, then if there's not enough money this year for it, they spent that on something else, so that probably needs to get factored into the next year budget. To me, tree removal has become kind of a little bit of a hot topic lately because a lot of aging associations are, working with tree removal and landscape replacements lately. And we get that question a lot of, can we take that from the reserves? And I always say, well, that depends on whether that's factored into the reserve study to begin with. I see a lot more reserve studies are putting landscaping replacements and removals in there, just as associations are aging. But if it's not part of your current reserve study and you do take that from reserves, then you're taking away from those roof replacements and those other projects when they're going to come due then, because you're not putting the money in there for that then.
But Karen, I think with any, regardless if it's trees or anything, if you put something in the budget and at the end of the year, you don't have money to do that, then you gotta try to work it into.
But the next year's budget, right? Because you either overspent this year, so there's no money left. So next year you're gonna have to figure out how to factor that in there then.
Yeah, but a budget's just a plan. There's
Right.
not anything that says you have to do anything in the
Right.
budget. It's purely a plan.
Right.
I wanted to thank everybody else for attending tonight. We had a really nice group attend, and hope that we can continue to get. We are going to do more video board education events because it just seems that it's easier for people to attend. I did want to mention that we are moving our Naperville office. By the end of September, we'll be in a new building, which happens to be right next door to the building we're in. So we're not going too far. But we're going to have a lot more meeting and video capabilities in that office. So we're really excited about that too. So, a lot of big things happening this year with regard to our home, so to speak, our home away from home. Well, thanks again for attending tonight. We really appreciate it. Hope to see you more and have a great evening. Thanks.